Hey everybody, welcome back to another episode of Green Spud Trades. And today I'm going to be highlighting another stock that caught my interest. It's called Iron Mountain, ticker symbol IRM. All right, so here's the Iron Mountain stock chart. Mid-February, this stock, it hit a new 52-week high after the earnings report. And look at the volume there. There's a nice volume candle. And then when you back out the daily chart, you see that I had this downtrend line there because I was watching this for some time. It not only broke out to the new 52-week, but it also broke this downtrend line. And I drew a new downtrend line here to see if it breaks out through this level as well. But a lot of times, this is the type of setup that I really like, these trend line breaks, because a lot of times if you get a volume move breaking out from one of these trend lines, then you get a continuation. And a lot of times if it's with an earnings report, that's usually driven by fundamentals, and then you could have the larger whales in there buying it, which is why you get the volume. And that's sort of technical setup that I like and tend to look for. So what does Iron Mountain do? So what does Iron Mountain do? And why is the stock so interesting? Well, it's a pretty cool business. They're in the document manage. They're well known for doing document management for a corporation. So you've probably seen in a lot of companies, they have boxes that have Iron Mountain labels on them. And Iron Mountain, they could take these documents off-site for storage or for shredding to kind of give you a sense of what they do.
Environment. There's simply too much at stake to handle retirement.
Oh, okay. So this is about their data center business. So Iron Mountain, they're really well established in the document storage and scanning and shredding, but the really high growth component right now is in data centers. And when I looked up what this company is doing and what has been driving their growth more recently, they are a beneficiary of AI and the whole data center build out. So it's a very technology oriented company, which is actually unusual for a REIT. This is a real estate investment trust. That's how they're categorized for their accounting reasons. But it's a very technology oriented business that they're in. And data centers, which they operate, they have a whole division that operates data centers. It's part of their overall strategy. That's a key part of their growth right now.
Retired devices and the data they contain poorly. The problem is, disposing of retired technology assets like mobile devices, laptops, printers, scanners, and servers, let alone decommissioning data centers, is a major headache. If even one hard drive goes missing, your security is at risk. Trust us to safeguard their critical information and retire old IT assets securely.
Okay. Let's see what makes this business interesting is they both manage the data centers. So they have data centers that they could sell by the megawatt of capacity. They rent out the capacity inside the data centers that they own. But they also manage all of the stuff that goes inside of the data center, like the server hardware, the hard drives, and stuff like that. They help, it's called asset lifecycle management. There's a whole set of laws and compliance around disposing of those sort of things. And that's what Iron Mountain does, and it's a rapidly growing part of their business. So, like, for example, if you have a hard drive in your data center, there might be something on it like protected health information, things that are subject to rules like HIPAA or the GDPR law in Europe. You have to dispose of your hard drives in a particular way to make sure that that data doesn't get into the wrong hands. So the hard drives have to be wiped. And then not only that, but if they're going to dispose of like old assets, they have a salvage value and they could be resold on the market, and Iron Mountain helps. There are a few companies that do this stuff. It's kind of a fragmented industry. Iron Mountain is a leader in this industry. They're one of the bigger players. One of the ways that data disposal and IT asset disposal can be differentiated is with the contracting terms. So a lot of these players, like let's say like Dell or HP, they might have IT asset disposal contract with company, but they might lock in terms such as a length of how long they have to have the contract, or maybe even require that certain hardware be purchased from that company as well. Although this is a very fragmented industry, there's consolidation going on, and Iron Mountain has been making acquisitions in this space. So they've been growing it that way as well, getting smaller companies. And this company has the expertise to handle it a certain way. Here's like their data centers. They've got a big data center that they own in
WPA1,
Pennsylvania.
Crash-resistant gates, 3-factor access controls with...
This data center has an underground lake because it's an underground data center. And you know how like one of the issues with data centers is the water consumption. Well, this one, they get the water directly because it's underground. They I guess have like a pipe going into this underground lake, and they recycle the water inside of the lake. They have a $150 million contract with the Treasury Department for document storage and also scanning documents. So they take all these government documents and they put it here in this secure facility. Yet another business line they're getting into is something called dark data. That's what they refer to it on the conference call. So this is another area where this company stands to benefit from the whole AI thing. So they own the data centers. They help with the management of the stuff in the data centers for companies, even data centers that they don't own. And then with the document storage, they've got this other product for AI, helping companies find stuff inside of the document. So basically they scan it and then they have their products which use metadata and agentic AI to help the companies make use of old documents, basically. Going back to the chart now, you have this period of time where it hit the high and then it retreated. Oh gosh, that looks like a good 40%. And then it's spent most of last year consolidating, and it looks like it might be ready to break out again. I think one of the things that went wrong with it last year is the DOGE department in when Elon Musk was running that for the government, because there was a threat to the government contracts that they have.
Where the United States federal government stores and processes retirement applications. Here's how Elon Musk described it.
There's a limestone mine where we store all the retirement paperwork. And this mine looks like something out of the 50s because it was started in 1955.
Okay, so basically what happened was this facility that Iron Mountain was managing got under the scrutiny of Elon Musk going into the Liberation Day. As you can see, that's where it bottomed. Even though a lot of stocks got hit during that time period, I think one thing unique to this stock getting hit was that they had that government contract that was under scrutiny. It seems like they've been able to move past that now. I guess it didn't happen. As far as I could tell in the news, they didn't scale back on anything there. So they did $6.9 billion in revenue last year, and they've been steadily growing between 8 and 12%. A lot of their growth is driven from the whole data center business and the asset lifecycle management business. So on the earnings conference call, the CEO stated that a few years ago, 90% of their business was document storage and document storage management. But now that core part of their business is only 70% because the data center related stuff has grown so much, it's becoming a larger share of their revenue. Operating income is still going up. Because they're a REIT, they have to pay out 90% of their funds from operations to shareholders and dividends. So you do get a nice dividend with this stock. Revenues are broken down into storage rental, which includes the traditional business. That was $4 billion for 2025. And then the 2.8 billion is the digital related stuff. Both divisions are actually growing pretty well. So they recently completed a stock repurchase program. Because of the stock repurchases, they have a negative shareholder equity. Still, you're getting a nice 3% dividend from this stock. Right now it's at 86 cents per share per quarter. They've been consistently raising this over time. A few years ago, it was at 62 cents. Here's a slide deck from their earnings conference call. Look at that growth. $0.5 billion in revenue in 2021, and now they're at $7.7 billion. Their guidance is a lot higher. The digital stuff, as I said earlier, it's at 20% of the revenue, but they expect that to grow to be an even larger share of your business. Forward PE ratios. For 2026, it's trading at a 45 PE. Remember, the stock that I did an analysis on just before this, Cognex, that was trading at a 39 PE. I hope you found this video to be interesting. If you liked it, give me a like and subscribe to my channel. And I'll see you in more stock analysis videos.